Okay, guys, welcome, welcome, welcome. Can you all hear me? Let me know in the chat. Can you all hear me? Hello, hello, hello. Awesome, awesome. Thank you for joining me, everyone. It'd be great if you guys could turn on your cameras, start engaging in the chat. By the way, let me know where you're from as well. If you don't know, I'm in Australia, down under. Turn on your cameras then. That way I can feel like I'm talking to people and I'm not just yelling at myself. Oh, Costa Rica. Nice. Nice. Thank you, thank you. Got a fellow Australian down here. Awesome. Okay, so we've got a good mix. We've got a good mix around the world, which is very good because this works across every developed country. So maybe not Nigeria or some other place like that, but where all the places I see, it works. All right, let's get into it. Welcome to the 100% Vendor Finance Masterclass. Some of you may be familiar with who I am and what I do. I do see a lot of new names. I see some familiar names, but as we go on, you'll get to know me. I'll get to know you a little bit more. And at the end, I'll be taking whatever questions you have. So just sit tight and take notes. Get comfortable and pay attention. So today we're going to be talking about how to actually buy established, profitable cash flowing companies with 100% vendor finance. So you don't spend anything out of pocket or need to geek out on finance or industry shit. Right? I'm a very unconventional teacher, let's say. My methods aren't MBA backed. I don't have a finance background. I don't come from the typical accounting acquisitions, legal background, right? I'm teaching this from my personal experience, the experience of my clients, my network. So it's very practical, and I like to keep things very simple as possible. So super important before we really get into the content of what I'm going to teach today. Make sure you're taking notes. So make sure you're sitting there with a pen and paper. That's the best way to do it. That's the best way you're going to learn, right? What's written is retained. And make sure you get rid of any distractions. I'm going to go through this quickly. You know, we don't have too much time together, so I can't get into too much detail. And I can't linger too much on particular topics. And again, remember, there are going to be questions at the end. And $10,000. Make sure you have that ready to pay me at the end. I'm just joking. Um, Treat this, even though this is free, right? Treat this as if you paid $10,000, right? How differently would you treat this session, these 2 hours that I'm going to be spending with you, if you paid $10,000? And people have paid me $10,000 to just sit down with me to talk, right? These are established business people who understand the value of what I'm talking about, understand the value of paying for advice, right? Because at the end of the day, it's all about implementation, implementation of what you learn. Right? So treat this seriously. And at the end, I'm going to be giving away an NBIO. If you don't know what an NBIO is, it's a non-binding indicative offer. That's the format I like to submit my offers. So I'm going to give you a free template, free structure, deal structure that I created that I've never seen anyone else do. And you're going to get it if you're here watching and you stay till the end. Um, all of this stuff, by the way, I teach in my Owners Academy. That's my private community. This is where I share a full course, I've got, guys all around the world, doing this stuff, right? Closing deals, no money down. That's our focus, no money down. As you can see, we've got group chats and I meet my guys as well. So I'll share a bit more about that later today. If you get a lot of value from the presentation and what I teach, it'd be my pleasure to share how you can continue learning more in detail. All right, pop quiz first. How deal ready are you? I don't want you guys to type the answers. I want you guys to write this down in your own notes. Okay? So let me know when you're ready in the chat, when you've written down your answers. We're going to go through this at the end. See if you got them right. And ultimately this is going to test how ready are you to start executing this model before we even start getting into it. So when you're finished with your answers, you've got them written down, just pop a little ready or let's go in the chat. So first question, what is the minimum DSCR I recommend? DSCR, do you even know what that is? So we're going to go through that today. How much cash do you need to buy a company? That's a should be a pretty simple answer. Now, what's the best way to find deals? This is a very common question I get. What's the best way to find deals? What's the best deal negotiation tactic? I'm going to be teaching you that today. And what are the three sets of items you should get before making an offer? Before you even talk numbers, what should you get? And if you've been following my material across Instagram or YouTube, or maybe you've attended a live before, you should know these answers. So again, if you're once you're ready, just let me know in the chat. Just say I'm ready or let's go. Synergy, what are you talking about, Olivia? That's a good point. Yep. You do need to clarify if it's right for you as a person. Um, while we're on that, I always recommend getting into an industry or finding businesses that match your passion, right? Your expertise. Expertise is a double-edged sword. Yeah, if you know too much about an industry, if you know too much about a business, let's say you've worked in as an accountant before, right? Sometimes it's going to actually be a detriment for you to get into the accounting business, right? Sometimes. And I talk about this in my other material. Guys, what's taking so long? Who's ready? Come on. Ready, ready, ready. Let's go, let's go, let's go. Give you 10 more seconds. I'm gonna give you guys 10 more seconds and then we're gonna move along. Okay, it's easier if you're passionate about the business, but that's not very necessary, right? There's a very common example, the billionaire in China who owns a concrete company. Is he passionate about concrete? No, but he's passionate about making money, right? Okay. First thing I want to cover off is the elements of a deal. I see a lot of people overcomplicate buying a business, and this is all it really is. You've got four elements here, right? I've drawn a house, but this unit, right? That's the company. And then you have these three moving parts, you, money, and the seller, right? So it's essentially to buy a company, right? To buy a business, to close a deal, you need to engage someone who wants to sell their business, who owns a business, and in between you is money or a deal, right? So today I'm going to show you how to get across this hurdle, right? If you don't have money per se to buy a company, right? If you don't have $1 million, $2 million just sitting there waiting to buy a company, I'm going to show you how you can buy it without using any of your own money. And in fact, without using other people's money. Because there are only three main debt sources. I'm pretty sure there's literally only three debt sources in the world, right? Banks, that's the first thing. Right? You can get a loan from the bank, whether it's a personal loan, house loan. I'm sure everyone knows this, right? You can get a loan to buy a house. And obviously there's business loans, right? Business loans, there are heaps of different business loans, cash flow loans, asset loans, just lines of credit, right? You can structure debt in a variety of ways with banks, and they offer a lot of these products. Second is non-bank lenders, right? These can be investors, private lenders, family offices, just people or organizations or groups of people who aren't banks, right? They don't take deposits and they don't lend out other people's money. They have their own money and they're looking to get a return. So typically these debt sources are a bit more expensive. The interest rates are a bit higher and the terms are a little bit more favorable to these private lenders. But nonetheless, they can give you the money to get a deal done. Now, what we're going to be focusing on today is vendors. How do we use the vendors to provide us debt to acquire an asset, their asset, right? So that's what we're going to focus on today, vendor financing. Now, some of you might be asking, what is vendor financing? Vendor financing, basically an IOU, you're probably gathering, it's a loan, right? It's a loan with the seller. It's essentially, I'll pay you back, bro. All right? I will pay you back, trust me. That's essentially all it is. And that's the same deal that you have with banks and anyone else who gives you money, right? It's a promise, I'll pay you back. Now, the reason why it works is because you're using the profit and cash flow of a business to buy it, right? So you're using the business to buy the business. So on this note about profit and cash flow, w my whole model revolves around buying profitable cash flowing businesses. So we're avoiding the businesses who aren't profitable for one, and preferably have very regular cash flow. So one example might be um, businesses that work on projects, right? If you're working on quarterly or 6 month or annual projects and you only get paid every 3 months or you only get paid every 6 months, that's a very poor cash flowing business, right? You get big lump sums of cash, but yeah, you don't have cash coming in every day. Whereas I'm in the healthcare business, the clinical healthcare business. We get money in every single day. We have patients coming into our doors and they're paying out of their own pocket, or they've got insurance or third parties, and these guys fund us on a daily and weekly basis, right? So that's a very strong cash flowing business. And when we're looking at businesses to buy, we're looking at businesses with profit for one. That's the first and foremost. It has to be profitable. So no turnarounds. We're not trying to save a business. We're not trying to take a business and turn it around. That's a big misconception I see a lot, right? People get into this game and think, what like why would someone sell their profitable business? Like I'm just looking for businesses that aren't working. I can't do vendor finance, right? And that's correct. You can't vendor finance. Well, you can, but you can't vendor finance a business that isn't profitable and isn't cash flowing, because the whole point of vendor finance is you're using the money in the business to pay the seller. Now, you at this point you might be wondering, why would someone do this, right? If you run a business that's doing, say, $1 million in profit, why would you sell it to someone if you're already making $1 million in profit, right? The short answer is, oh, I already asked this. The short answer is it doesn't matter, right? It doesn't fucking matter. They could be sick, dying of cancer. They might want to spend more time with their kids. They might want to fuck off to Venezuela, to Dubai, something, right? It actually doesn't matter why someone would do it. And this is one of the biggest hurdles that a lot of people can't seem to get. And a lot of my clients, when I start working with them, they're like they're trying to convince, they're trying to negotiate, they're trying to present why people should take their offer. But the key thing is we're looking for a motivated seller, right? And I'm going to get into the reasons as to actually why people will accept a vendor finance deal. But the first principle I want you to understand is that it actually doesn't matter. It doesn't matter why someone would accept. But here's the real reasons why someone would accept. Usually, a vendor finance deal will give them an above market rate price, right? So if a rule of thumb is if you pay cash upfront for a business, that's gonna be market value. You're gonna be paying market value for a business if you're gonna give people money upfront, right? But if sellers are willing to be flexible with you, if they're willing to play your game, you should reward them. I believe in good business. I believe you should reward them for letting you dictate the terms, right? So let's say a business is typically worth, yeah, it's doing $100,000 in profit. Someone paying cash would be like, okay, I'll give you $300,000 for this business. But we're going to be like, okay, we don't have $300,000 to give you, so we'll actually pay you $500,000, but I want to pay you over several years. Right, so that's typically how vendor financing works, right? You'll pay above market rate, and sellers are usually happy with that because, again, it doesn't matter why they're selling, doesn't matter why they're going to accept. They just think, I'm going to get more money overall. I'm happy with that. Second thing is steady cash flow. Steady cash flow, I usually structure my vendor finance payments monthly, right? So I'm paying monthly payments to the seller. So they can usually fuck off from the business and then they don't have to worry about the business anymore. I'm managing it. Me and my team are managing it, but they're still getting paid a very decent salary, a very decent paycheck from the business without doing anything. Right, so they're getting a steady cash flow. So this is a really good retirement plan. I'm going to show you something called the pension plan later, the pension plan deal. Um, but we'll get into that. More money, I've already alluded to this, right? Above market rate, people usually get more money overall for their business. A lot of times, sellers haven't set up properly to maximize the value they get when they exit, when they sell the business, right? So I don't know if you guys have had uncles, your dad, your mum might own a traditional business, right? The way they operate is not optimized to sell at a really premium value. So we can actually offer a premium value just over time, and we can optimize things as we go. Potential tax savings. So this rather than the seller getting one lump sum payment, they are getting payments over time, which can be very tax beneficial, right? And this is when it pays for them to have a good accountant, right, who can advise them. But that's not your problem, right? This is something that I've dealt with some of my clients. They get hung over or strung over like, oh, but the tax problem with the seller, like that's not your problem, guys. That's their problem. Let them talk to their accountant. You tell them, talk to your accountant. If your accountant's not giving you good advice, get another fucking accountant, right? Not your problem. And fast closing. When you're vendor financing a deal, you don't have to go through banks, which means you don't need to present a formal presentation, a financing package, right? You can bypass this whole credit process and just do the due diligence that you need to do to close a deal. So let's say a bank deal can typically be between 6 to 12 weeks for them to do their shit. But for you to do this, let's say you have a good accountant, lawyer, you can close these businesses very quickly because all you need to look at is revenue, profit, and the quality of their earnings, right? So you can write this down, quality of earnings. That's the main thing you're looking for. And now is the best time, guys. Now is the best time to be doing this, right? I've only I'm just at the start of it, guys. Like I'm 3 years into this now, right? Into buying my own companies and doing no money down deals. And I've already got a network worldwide of guys doing this. I'm doing this with my healthcare company here in Australia. So if you're familiar with me and my content, you know my company and what we do. But just look at the numbers here. I can't remember if this was global. I don't definitely not global, but these are just some numbers based on industry in terms of total value, right? Look at these listings here. There are thousands. I think this is just Australia. There are thousands of listings across every industry, right? For you to go in and buy these companies. Look at the total value of the market. Look at the average price of these businesses, right? And just think these are listings, public listings only. I like to source my deals off market. So the deals that I'm looking at aren't even reflected in these numbers. These numbers are just public numbers. So just think about how many businesses there are up for sale in. That's why I asked you guys where you guys are from. If you're in UK, US, in the EU, developed countries, there are so many businesses just at your fingertips, waiting for you to get in front of to buy. So now is the time. Over the next 5 to 10 years, This is what we call the silver tsunami. So if you're not playing the game already, then yeah, people like me and the guys in my network, we're going to be snatching up as much as we can. Today, what we're going to be covering, three key things. Three key things so you can walk away with the game plan, right? So we're going to go through sourcing. I'm going to show you my secret sauce to finding deals, particularly off-market deals, the deals that aren't just public, like a prostitute on the corner, right? They're not public. You can't just walk up to them and give them some money, right? You're gonna have to find them yourself, but these are the best deals. I'm gonna show you how to find these deals. Positioning. This is the one thing that I think everyone overlooks, right? People skip this step and wonder why they can't get money from banks or investors and wonder why sellers won't take them seriously. Right? So I'm going to show you how to position yourself and your brand. So we're going to be focused on vendor financing, but if you position correctly, banks want to talk to you, investors want to talk to you, and particularly sellers, most importantly, sellers want to talk to you. And then ultimately structuring, right? How to put the numbers together and how to pitch the deal. So these are the three key things we're going to cover today. And you're going to walk away with how to actually use vendor financing and creative approaches to close a deal, to buy a company, particularly a six, seven figure, even eight figure company. That's rare, but even an eight figure company with no money down and pull money out of the deal. That's what you're going to walk away with today. The system that I'm going to show you today is how I closed my first deal with zero down, zero experience while I was unemployed. Right? So this deal was how I launched my own healthcare company. I was 25 years old, unemployed, I had no money, no industry experience, and this is the same system I used to acquire the company. Right? After I acquired the company, I pulled $150,000 in the first year, and I built mid six figures in equity for myself from the first deal. Right? Very first deal, no money, no experience, instant jump in income and equity. Right? There's no other game that really does this for you. And Cam is one of my guys in my network. I'm going to show you how he closed two deals in 23 days. Two deals in 23 days. So this model is for you if one, you're not afraid of hard work. Right, that's going to be very important. A lot of people who are looking for the 4 hour work week, you can't do this. You can't do this on a 4 hour work week. You got to be willing to face your own demons and insecurities, right? You're going to need to do a lot of negotiation. You're going to need to talk to people. You're going to need to engage parties and make offers that you might be embarrassed to make, right? You're going to have to face your own insecurities. You're going to have to be willing to throw everything you know. Most, to my point about if you know too much about a business, usually it's a very bad idea to go into the business because you're going to overthink things. You're going to be too analytical, right? You're going to make decisions based on logic. But particularly if you're religious or spiritual, you're going to understand this concept, right? The more intuitive you can be, the more you can just go off your gut feeling, typically the better things turn out, rather than trying to deduce things by logic, make sense of everything, right? You're gonna have to enjoy developing yourself. This game is a constant learning curve. I'm talking to you now as if, yeah, I've been doing this, right? I've been negotiating, communicating, teaching for the last 5 years. But you should have seen me before this. I was shy, right? I was very shy. I couldn't conjure a sentence without stuttering or repeating myself. You have to enjoy developing yourself. This is a game of constant development. You're going to be constantly learning about the business, finance, negotiation. Right? You're going to have to be continually investing in yourself. You're going to have to enjoy the pain, right? Without pain, there's no growth. And this is for you if you're tired of chasing money, a salary, and a capped income. So before I started this, I was working with a bank. I was making other people rich. I was working at a fixed income while I was doing more and more work, right? So if you're tired of chasing money and capping yourself with a job, this is for you because you can just keep building your wealth by based on the work that you're willing to put in, right? So this is my point about you want to build wealth. You actually want to build wealth and you don't want to just run this rat race. You want to take control of your life and income. alludes to my point about you don't want to be capped, right? And you want to play with the big dogs. You ultimately want to play with the big dogs. This is the game that the richest people in the world play. You see people who talk about, oh, I made $300 million last year. I made $100 million. I made $200 million. I made $1 billion. This is how they do it. They buy companies, roll them up, and sell them. And I'm going to show you a strategy how you can start playing the game even if you're not a millionaire or a billionaire. So you can start playing the game like I did when I was 25. I started playing with the big dogs by following this strategy. Just a quick personal story so you can catch up with, if you're not familiar with me, who I am, my story. As I said, I was working at a bank, soulless organization, did not enjoy myself. I thought I wanted to climb the corporate ladder. So this might be you, right? You might be thinking, I'm going to climb the corporate ladder, increase my pay every year. Typical story, right? I was making other people rich, not myself. At this time, kind of, my parents got divorced, they sold our family home, all this shit just started happening, yeah? And I kept on being told by friends, family, to just be normal. Be normal, just get a job, find a different place that you enjoy, right? Find something that that you like, that you can be comfortable with, that you can guarantee an income, right? Just be normal. I didn't want to be, right? I didn't want to just be some regular Joe making 80K a year and just calling it a day, right? I tried crypto, I tried freelancing, trading, ecom. I made money in all these things, but nothing compares to the satisfaction and the fulfillment of what I'm doing now. So if you don't know who I am, my name is Josh Lee, by the way. Uh, but who have you guys learned a lot? Have you guys learned a lot so far already? Let me know in the chat. I'm just going to quickly introduce myself before we dive into the step-by-step strategies. So, by the time I was 21, I closed over $30 million in deals in banking. I Right now I'm a global mentor and consultant to people all around the world, right? I'm teaching acquisitions. Before this, I was doing a little bit of consulting work with sales and marketing. I've advised, facilitated, led over $100 million in transactions to date, and I am the youngest in Australian history to do a no money down deal in healthcare. Right? Youngest in Australian history. And this is not just me, right? These are guys in my network. So I've just got little screenshots. We've got a group communication. But Arthur, he signed a $23 million deal, no money down. Cam, I've already alluded to him. I call him BDC. I'll tell you what that means later, what that stands for later. But he did two deals, 23 days. 100% seller finance, got $500,000 working capital out of those deals. Right? 23 days, two businesses, and pulled out $500,000 from the banks from doing these deals. My friend here in Australia, Jason, he was in the radiology business. He exited for $200 million in 7 years. Right, his first ever deal, he did $5.5 million, $0 down, and he exited 7 years later for $200 million to private equity. Private equity paid him $200 million. And Jalen, he was one of my recent students. He built a team. He secured the former CEO of IBM with the strategies and the scripts that I gave him. Right? So this is the kind of stuff I'm going to be teaching you. How you can start doing all this stuff. All right, let's get into it. Make sure you're taking notes. Follow along, right? If you have questions, save them for the end, please. I'll answer whatever you have. Um, But if you pay attention and you're willing to take action, you're going to be able to close that deal in the next 90 days. I'm going to give you the exact step-by-step things that you need to do to close a 100% vendor finance deal within the next 90 days. As long as you move fast and take action. That's the most important thing. As I've mentioned several times already, take action. Okay. I'm going to cheat a little bit today. I'm going to be hacking my own model. So if you're not familiar with my model, it's called the 3C model, right? The 3C's stand for credibility, capital, and closing. This is the framework that I base all my teachings off for acquisitions, right? When people come to me to learn how to buy companies, this is the framework I take them through. And usually this takes a little bit of time, nuance, and but we don't have that luxury today, right? Today we're going to be focusing on vendor financing, how you can walk away and just start executing, right? So you can skip the shit that I preach on a day-to-day basis. You can skip it all, and I'm just going to show you how to do these things. These three things: how to find deals, how to position yourself correctly, and how to structure and pitch the deal. So remember the the shit drawing that I did before, right? Elements of a deal. It's as simple as this. Don't overcomplicate it. All you need to do is find deals, and when you get in front of sellers, you need to position yourself, your brand correctly. And when you make the offer, it's all about structuring right and pitching right. Right? If you can do these three things properly, you'll be a good deal maker. So, first thing is finding the right deal. Finding the right deal is all about finding a motivated seller. A motivated seller, and ideally, these are the metrics that I like to base my deals off. At least $1 million in revenue, 15% profit margins, and four or more employees. Right. If you go under this, especially in this day and age, you're typically looking at a business that is the owner is heavily involved in the business. I'm not going to go into how to do those deals today, but when you're at $1 million plus in revenue and you're at a 15% profit margin or more, it typically means there's management in place and people are doing things without the owner, right? So it's kind of like a self-sufficient business. So when remember how I said we're not looking for businesses that are turnaround. We're not trying to turn shit around. We're trying to find businesses that are already profitable, already cash flowing, and ideally with a team that already knows what to do. So you don't need to step in and figure shit out. You've already got a team of people who are working the business, who are making the money, who are collecting the cash, delivering the service, doing the shit. You don't want to be jumping in, ideally. Now, brokers. Brokers equal brokies. Avoid them. I have never had a good interaction. Actually, that's a lie. 99% of the interactions I've had with brokers are shit. They don't understand business for one, right? They don't understand business for one. I think I got that in my next slide. Yeah. Okay. They don't understand business for one. They might have done an MBA and they think they know all this about business and they give you numbers, they know how to work the deal. It's bullshit. Most of the deals I look at from brokers, they are overinflated, right? So a business, they could show me a business that's $3 million revenue and holy shit, Josh, look at this. They're doing $1 million in profit. But then when you peel it back, you look at the profit and you're like, wait, why did you add this back? Why did you add this back? And the one thing that gets me that peeves me is they add back the owner's salary. And then I ask, is the owner involved in the business day to day? And they'll say, yes. So the owner could be paying themselves 250K, but the broker's adding that back into the profit, right? So realistically, you're looking at a business that's $3 million in revenue, and they're realistically that not $1 million in profit, but they're at $500,000 in profit, right? But and now the broker has finger fucked the deal. He's finger fucked the deal and he's made the seller so excited for a particular deal, right? Because the seller's like, yeah, oh, so you're saying that my business is at $1 million in profit. I could sell my business for, let's say, 3 to 5 times. I could sell my business for $5 million, you say? And this is the seller's expectation. So when I come in and say, well, I'm only going to pay 2.5 mil or even 2 million, the sellers don't want to do it. The sellers have this idea, they've already spent the money. And that's one concept you can write down. When you're talking to sellers and you're giving them a price, they've already spent the money in their heads. And maybe you do this as well, right? When maybe you've done a project or maybe when you've got a bonus coming up at work, right? And you're getting paid more money than what you usually would, you're thinking already, where am I going to spend that money? Right? It's like when you're doing your tax returns, right? You get that money, you're like, oh, what am I going to spend this on? Am I going to go on a holiday? Right? So when you're talking to sellers, they've already spent the money. And it really doesn't help when you've got a broker who doesn't understand business for one, trying to finger fuck the deal. And my first point here, commission incentivized. A broker is trying to maximize the purchase price so they get their commission. Right? They do not care whether the business works for you or not. They just care as to what they can make the value of the business seem to the market. I say most people who buy businesses from business brokers are ill-advised, right? They are suckers. And the brokers are praying that you know nothing about that the brokers are praying that you know less about business than them. So they can jack up the price and give you something that's double its value. So they make a commission from the seller. Because who pays the broker? It's the seller. So it's basically two versus one. And it's just an extra layer of work, right? So there are ways to negotiate and handle brokers, but today we're not going to get into that. So how do you find deals? You go off market. What does going off market mean? Calls, emails, LinkedIn. Go directly to the sellers. These are the three ways that I source all my deals, and I've always got deals on the table. I'm about to close one by the end of this year. I've got a handful that I'm working on. I've just sent an offer yesterday for another deal, right? There are no shortages of businesses that aren't listed on the market, aka on a broker's website, on Biz Buy Sell. If you're in Australia, what is it? Commercial real estate, right? There are heaps of probably more businesses out there off market than there are on the market. So I always say the best deals are off market, and it's very easy. It's very easy to find these deals. How do you do it? We have the internet, guys. We have the internet where you can literally Google, LinkedIn, and one tool that most people, if you've been in sales or outreach, you know Apollo. Apollo is a powerful tool. It's probably the stock standard in outreach, right? Trying to find businesses, owners' names, email addresses, and phone numbers, right? But at the end of the day, you can just Google businesses, right, and call them directly. You can LinkedIn, you can just type in, I'm in healthcare, right? So I just type in clinic director or clinic owner, and it gives me a list of thousands, tens of thousands of clinic directors. And with the filters, like holy shit, it's so easy. You can just filter. I'm in Melbourne, Australia. I just filter Melbourne, Victoria. I filter um, clinic director, filter by location, and boom, I go through the list. And this is what I mean about working hard, right? You're gonna actually have to find the deals yourself, right? So if you want to close a deal no money down, you're not gonna do it with the broker deals. I haven't seen anyone close a broker deal no money down with vendor financing, but all the guys that I know, all the guys that I'm coaching, myself, we close no money down deals by finding the deals ourselves. So I'm going to give you an example here. Lead scraping 101 using a particular tool. Make sure you take note of this one. This is a very powerful and easy tool to use. So one thing that some of you may be familiar with, I've just got an example here. You type in brothel near me, right? It gives you a list of all the businesses on Google, right? Go to Google Maps, type in whatever business, so plumbers near me, clinics near me, whatever business you want to buy. Doesn't matter. Go near me and then scroll down to the bottom of the list until you see this part. You've reached the end of the list. Now, this is on Google Chrome, by the way, right? So for all the Firefox and Safari and God forbid, Internet Explorer, use Google Chrome, go to the extensions and find this thing called Instant Data Scraper, right? You can all see this, right? Instant Data Scraper. Make sure you're finding the one with the pokeball. the one with the Pokeball, Instant Data Scraper. Use that extension on this page that you're on, and boom, it will extract it all into a list for you with their website, the name of the business, their Google rating, right? How many reviews they have, and their phone number and email address if they have it. Right, so in brothel's probably a bad example for it, but in the clinical world, usually there's an email address and a phone number that comes with it. So most businesses on the Google listings have this data for this tool to just extract for you, right? So this makes your job so easy, right? Honestly, before I found this tool, I was going through the Google Maps and just finding places in my city, in my state, and inputting them into a list manually. Right, so this is a very easy tool for you to just put it all into a list for you in an Excel sheet, in a Google sheet, so it's all laid out, ready for you to smile and dial or email. So from here, here's where you plug these businesses into Apollo, LinkedIn, Pippi leads. So I didn't put the name here. Real ones know. This is a tool that no one talks about. PIPI leads, right? And because you're watching this, you get the secret sauce, right? PP leads, PIPI leads. This is how you can find the email address of 80 to 90% of the people you want to reach, including billionaires. And by the way, in my private community, the Owners Academy, I show you how to get in touch with billionaires, how to get a billionaire to mentor you, how to get in touch with them, how to schedule a meeting with them, right? And I've got a billionaire mentor myself. I think in my intro slide, I included a picture of me and my billionaire mentor. But Pippi Leads. Pippi Leads is how I found the email address of 60 or so billionaires in my country, in Australia, right? So use that tool to find the email address of basically anyone you want. And what you do from here, you find the name of the business, you plug it into Apollo, you plug it into LinkedIn, and you just find the seller. You find the owner, the director, the managing director, whoever. Those are the typical titles, right? The director, the owner, managing director, founder. These are the people you want to reach. These are the people you want to talk to. So that's lead scraping 101. Now, this is the flow. You can take a picture of this if you want. I know my face is blocking a little bit. You can go for that, if you guys can see that. And I'm going to block it again. This is the typical flow of how you find businesses, right? You start with identifying the business you want all the way through to settlement. And these are the steps that you need to take, right? You got to build the list, you got to call, email, you got to reach out, you've got to review the numbers, you've got to make the offers, due diligence, and boom. As simple as this, right? This is the flow of how you close, how you buy a business in its most simplest form. Follow these steps. And I'm going to go through these in a little bit more detail. And this is essentially the process that I coach all of my clients on. Right. So if you want in-depth, in detail, tailored advice and live coaching with every single step of the process, you can do that in my community or through my private coaching. Okay, so now you know how to find deals, right? I've just given you an example of how to find deals. That's only the first step. The important things is positioning and presenting the deal. This is a saying from my virtual mentor. Perception is reality. Perception is reality. In other words, what most people identify this quote as, fake it till you make it. Right? Just because you're not a millionaire now, just because you're not a billionaire now, doesn't mean you can't act like one, be perceived as one. And in saying so, I've alluded to some the religious and the spiritual people, right? How does law of attraction work? The law of attraction does not work by you thinking about what you want. It works by you acting like the way you want, right? Acting as if the outcome has happened, right? Operating at a particular frequency, operating at the frequency that you want to achieve or that you want to operate, right? So if you keep identifying yourself as, oh, I'm just a student, or I'm just a guy that works 9 to 5, or oh, this is one example. One example is I've had this quite a lot in job interviews when I interview people, especially women, right? Single mothers. When I ask them, tell me a bit more about yourself, or tell me about yourself. Hey, thanks for coming in. Tell me about yourself. They say, my name's Jill. I'm a single mother, right? Why would you identify that? Actually no. Forget I asked why. How you see yourself is just how you're gonna act, right? And how other people are gonna treat you, right? So if you identify as, oh, I'm a single mother, right? You're just putting yourself into a victim mentality, right? So I say to these people, and I've said to them a lot at the end of the interviews, I say, hey, you have so many other qualities behind you. You're smart, you're organized, you're very capable, you're very well presented. You are more than just a single mother. Lead with your other qualities, right? So you're not just a student, you're not just a and so when I did my first deal, I was unemployed, right? I could have identified as unemployed. But no, I chose to identify as the founder of JC Health Group, right? I was a founder of a nationally recognized company with world-class people in working for me, right? That's how I identify it. So this is what I mean by perception is reality. You kind of have to fake it till you make it. Right. Most people who walk into a bank or walk into a business owner's office and they say, "Oh, I'm just a beginner. Like I'm just a beginner. I just want to buy a business." That's not how you position, and that's the reason why people don't take you seriously. So 80/20. I'm going to show you how to position yourself so you do 80% of the work, right, without having to convince people that you're worthy of talking to. So, right? So, to my point about the single mother, right? You've kind of lost me by introducing yourself as a single mother, but throughout the conversation, you're trying to convince me otherwise. You're trying to convince me that you're a good worker, you're hardworking, blah, blah, all these things, right? And yes, while you might be a good communicator, well organized, right? You can manage people well. While that might be true, you can actually just bypass my doubts with your first impression. And remember this, you have 2 times to make a first impression. How you look and how you sound. How you look and how you sound. If you can nail the first impression, that's 80% of your work. So work smarter, not harder. We all know that. So as I've said, do not present as a regular Joe. You don't want to just be a regular person. When you go to a seller, when you talk to business owners, you don't just want to be just another guy coming, oh, this guy just wants to buy my business. Like you want to present as someone sophisticated, someone who knows what they're talking about, someone who knows what they're doing, not a regular Joe. So here's what you need to do. Well, you don't need to do anything, right? But this is what I would recommend. You recruit a team, so you have other names behind you. You wear a bloody suit. Don't rock up to people's offices looking like you're going to a friend's house. Because these people aren't your friends, these are your business opportunities. And remember what I said about a first impression, right? So wear a suit and speak with authority. I tell all my clients and all my students, you need to practice, 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 practice. You need to practice your scripts. You need to talk into the mirror. You need to go practice your public speaking, right? Learn the scripts, learn the terminology, get comfortable with the finance terms, right? It's like if you've ever been in sales, you've probably learned this before. When you're selling something and they go, people go, oh, how much is it? And you go, oh, it's $10,000. Boom, instantly you've lost credibility, right? But if they ask, Oh, so how much is it? You say, it's only 10K. Right, there's big difference, right? Big difference to little stutterer, to 10K to, oh, it's just 10K. Right, so speak with authority. That's what I mean. This is part of my 3C model, right? So just to give you some awareness, just to give you an outline, my 3C model, as I said, we're going to bypass this, but just to give you an outline of it. So credibility first. This is what I mean by credibility, right? Recruiting a team, dressing well, speaking well. This is your credibility. And then mastering the capital mechanisms while executing the closing process. This model is essentially how my friend rolled up his radiology business and sold for $200 million, right? But this is not what I'm going to show you today. What I'm going to show you today, again, is a hack. But I just wanted to give you an insight into the full model if you're interested. And this is how you play the big boy game, right? If you want to exit for 200 million, 300 million, 500 million dollars, this is the full way to do it. And here's an example of my team that I built, right? So this is my company, JC Health Group, and these are the guys on my team, right? I've got a former High Commissioner ambassador to the UK from Australia, right? So if you know the ambassador role, um, sometimes it can just be a representative role, but it's a very high position in the government, right? So he worked directly with the Queen. He was the chairman of one of the world's largest hedge funds, right? So just imagine this. If I was to go to a bank or a seller just as Josh Lee, I'm just some guy. But if I go as, hey, I'm the founder of JC Health Group, and these are the people in my company working with me, there's a much different persona, perception, right? I'm working with someone who worked directly with the Queen, right? And that's just one guy. All these other guys on my company are world-class professionals. So I'm going to show you the hack. This picture here is me and Christian Dawes. You might have heard of him. He recently did two podcast interviews with Brad Lee and Dan Pena. Christian is a fellow Australian boy. He's in Victoria. He's in waste management. So he did his first deal, $2.4 million, but he did something called a project version, right? So not like what I teach, a 3C model, which is a comprehensive model, and we focus on things way before we start looking at businesses. But what Christian did was he started he started looking at businesses first. Right? He started looking at businesses first. So number one, he found deals. And then two, he built the credibility and expertise for that deal. Right? So this is very different from my model where I build the credibility and expertise first, so then I can find the deals and the money. Christian went the other way. Christian found deals and then built credibility and expertise for that deal. And then he structured and closed from there. So this is essentially what I'm going to be showing you today. So going back to the elements of the deal. If we're taking away the money, if we're taking away the money, that's a gap. That's a vacuum in the process. So if you understand quantum physics, you understand that if you remove something and you create a gap in the world, it needs to be filled, right? The universe, the fucking physics, I can't explain it. I'm no genius. It demands to fill that space. So if we're removing this space of money up front, what needs to fill it? What do you think needs to fill it? Right? What do you think needs to fill this gap of no money down? I'll let you think about it for a little bit. What needs to fill this gap? Trust. How you strike deals without giving people what they expect is trust, right? A seller needs to trust you, your company, your structure, your vision, your mission, your whole presentation to say yes to you. That's the essence of sales. Someone needs to trust that they can get the results that you're promising. or they can get the outcome that you're promising, right? So when people say vendor financing doesn't work, it's because of shit positioning and shit pitching. I've had so many people come up to me and say, vendor financing doesn't work. Like I've spoken to 20 sellers and they all said no to my offer. And then I asked them, how did you position yourself and how did you present the deal? And I'm going to get into how to actually overcome these biases, right? What people get wrong. So this is essentially why vendor financing doesn't work. So here's two elements to a powerful position. How you and your team, you and your team's reputation and how you deliver. Right? So you don't necessarily need a team, but a team is there for reputation. So if you're just some random, like me, I was unemployed. I was young, 25 years old. That was only 3 years ago, but young guy, no job, no money, no name. I don't have a reputation. So when people see and hear me, they're just like, you're just some kid. But as I said, if I have a team behind me, my reputation changes dramatically. All right, so this is why I highly recommend building a team. And then ultimately how you deliver. So where do I put it? Okay, I've got it later. How you deliver is all about how you present the deal, right? So, and a lot of people don't know how to present a vendor financing deal. They just go, "Oh, I'm going to give you a vendor financing deal." And when most sellers hear vendor financing, they're going to turn away. They're going to be like, "Fuck off. Just fuck off." So, what do I mean by team? So that's the first thing. What do I mean by team? Partners or board of directors. This is your reputation and expertise. This is how I want you to build your team. You either get partners, so this is what Christian did. Christian got equal partners in his business, 33% for everyone, 33.333, whatever percent. He had a CEO and a CFO. These are world-class professionals that he reached out to cold contact on LinkedIn, LinkedIn. If I'm not giving it away already, that is how you find people, or a board of directors, right? So my team, this is my board of directors, right? This is the team I'm talking about. How do you actually get them on board? So if I'm not paying them a salary, or remember, we're doing no money down, right? If I'm not paying them a salary, if I'm not paying any money, how do I get them on board? This is the answer. Free founders equity. I'm just going to read this out to you. You issue shares to individuals who can provide you the credibility and the expertise to grow your company at a zero cost basis. They believe in your vision and execution enough to work with you effectively for free in hopes of a profitable outcome via profits, bonuses, exit value. Right, I'm blocking that, am I? So you're pitching something to, you're pitching an idea. This is like trying to get investors, but you're not getting any money from these people. You're just telling them, hey, I just want your reputation and expertise. Now, this is the recruitment process. This is the process that I teach in detail. I literally give what fucking buttons to press, what to say at every step, how to set up a meeting, what to say in the meetings, the interview, right? Every part of this process I teach in detail in my private community, the Owners Academy. And by the way, I will be making an offer at the end for you guys today, a very special offer that no one else is going to get. So if you want to join the Owners Academy, you're going to get detailed coaching and course material around all these steps. So if you want to take a picture of that, or if you want to write these down, this is exactly how you find people. These are the steps that you need to take to find and recruit people. Okay. Positioning and presenting a deal. So I've just cut out a portion of the flow that I showed earlier. You call, you get in contact with someone, you send them an executive summary. Now, this is the thing that most people don't ever do, sending an executive summary. And then the third element of it is actually making an offer. So this is what I mean by positioning and presenting yourself. These are the contact points when you're positioning and presenting. So I'm going to go through the three elements. So the first contact, right, is all about your mannerisms, the right questions, and steering the ship. If you don't present as a professional, no one's going to treat you like a professional. This is why I say wear a suit, use the right mannerisms, use the right terminology, right? And then formal establishment. What do I mean by formal establishment? Is actually writing, putting something in writing, right? Why are legal contracts in writing? It's because that is the formal way to do things, right? So, and if you work at a company, if you work at a big organization, I bet if you have a good manager, if you have a good organization, they're going to tell you to put things in writing, right? When you have meetings with a manager, with a team, they want you to put a summary, they want you to put meeting minutes in writing because this is what formalizes it. So here, once you actually make contact, once I make contact with a seller, with an owner, I always put something in writing and say, hey, we just spoke on the phone. Here's my executive summary, right? So every seller, I give an executive summary, right? An executive summary is just an outline of me, my company, and what we're looking to do, right? And just a little bit of a formal breakdown of who we are. And then actually presenting the offer. So the third thing, how do we present the offer? The key thing is WIFM. If you've been in sales, you should know what this is. WIFM. What's in it for me? So I missed an I, but what's in it for me? This is how you should present every sale. If you want to get more of what you want in life, whether it's with your friends, your mum, dad, family, with your girlfriend or boyfriend, you want to start getting more of what you want, you start presenting things what's in it for them. So rather than saying, "Oh, I want this. I want that. I want this because of this, blah blah blah." You present something and say, "Hey, what do you think about this? This would be good for you, wouldn't it? Like you would make a lot more money doing this, wouldn't you? Hey, you would enjoy this, wouldn't you? Right? That's what's in it for me. So not why they shouldn't do something, right? You should always present why they should. Be a fucking professional. So I'm going to be talking about the thing that most people get wrong. After I sip some of my delicious Voss water. By the way, Voss water is the best water. I don't know why else. What kind of water you would drink? Cheers to the Norwegians for coming up with this genius idea. Glass bottle. Anyway, what do I mean by be a fucking professional? I'm gonna give two examples. I'm not gonna explain what being a professional is. I'm gonna give you two examples. On the left-hand side here, you have Rampage Jackson, Mr. Quentin. Mr. Quentin Jackson. If you don't know who he is, he's a former fighter, professional fighter, and now he does streaming. Right? He's a streamer. He's joined the kids and he started to stream his day-to-day life of him doing shit, right? The reason why I put him is just because he's the most recent example. But there was a clip of him that I saw where someone walked up to him to ask for a photo, right? He got the photo, but the reason why it became a clip is because this person walks up behind Rampage and he goes, "Can I take a photo with you?" There was no hello. There was no, hey, my name is Josh. There was no, hey, I appreciate what you do. I follow you. I've seen you streaming. I enjoy your fights. There was nothing. It was just, can I take a photo with you? Right? That's not how you present and introduce yourself to people, right? And this is how most people treat business owners. They go, "Hi, they might not even introduce themselves. They go, "Hi, are you looking to sell your business?" That's why would anyone ever sell to you? You didn't even bother asking their name, asking anything about their business, asking anything about their numbers, their team, what they want to do, right? There was no rapport being built. There was no relationship. They just went straight for the ask. And I feel like it's a lot more prevalent in the younger generation, so my generation, right? It's very prevalent in my generation where we're just so used to screens. We're just so used to quick communication that we just go, hey, and I'm going to talk about this in the next example on the right-hand side, but people don't know how to introduce and just pace themselves again. And as I said, how to be a professional, you introduce yourself, you get the other person's name, and get a little bit more context, establish a relationship. right? I'm sure every celebrity has gone through this, right? Well, there's a paparazzi, right, who don't even ask to take photos. They just take photos. But people who walk up to you in the street and who don't even introduce themselves, like, whoa, back up, right? What does, just think about it. If you're a celebrity and people just walk up to you and go, yo, take a photo with me, right? How would you feel about that person? So this is what I want you to think about when you're approaching sellers, approaching bankers, right? Talking to professionals. On the right hand side here, this is, a guy trying to pick up a girl, getting a number, denied, right? Why is she not giving you her number? And we've got a few ladies in here. Why do you not give your number out to guys? It's not because they're ugly or they're not funny or whatever, right? But one thing I see a lot in the community in this pickup space, right? Or one thing I see a lot with the younger people, they just go, "Oh, hi, can I have your number?" Right. Same thing with the picture thing. Like, why would you go up to a girl or a person and just ask, "Can I get your number?" Where's your name? Where's getting their name? Asking about them, developing a relationship, right? Develop a relationship. That is the key to being a good professional. If you guys want to see this in a little bit more action, there's one guy I recommend you watch. His name is Ryan Serhant. You might have heard of him before. He's a real estate guy, right? Ryan Serhant. Serhant. You can check him out. Great sales and real estate stuff. He talks a lot about building relationships. Anyway, I'm not going to harp on that for any longer. Hope you get the point. Here's a little example why I say wear a suit, right? Who are you going to trust more? The person on the left or the person on the right? Like, if someone was to approach you randomly in the street and you had to give them your phone, your wallet, for whatever reason, you had to hand them your child, who would you trust more? Someone just in jeans and a shirt, or someone that looks like a professional, who looks like they have money, who looks like they are trustworthy, right? And I understand these are just stock photos that I had to find, right? But on a typical basis, right? When I'm walking down the street in my casual clothes versus when I'm walking down the street in my three-piece suit, the looks I get, the compliments I get, the conversations I have are worlds apart. If I'm just in my hoodie and my trackies, in my tracksuit pants, people just treat me like a normal person. But when I'm in a suit and I've got my hair done, I've got everything all nice, I get VIP service everywhere I go. Right? It's a subconscious thing. You might not believe it. You might have been deluded by people who say, "Ah, billionaires are the ones who work in pajamas," right? People in suits work for billionaires. That is not the case in real life. That's social media virality, but in real life, if you talk to someone in a suit versus someone casual, it's worlds apart. Okay, so first contact, I've already alluded to this. Introduce yourself. When you talk to a seller, these are the things you want to cover off. You want to introduce your name, your company, your position, and your gender. So, as an example, hi, my name's Josh. I'm the founder of JC Health Group. I am acquiring companies. I currently own several clinics in this area, and I'm currently growing via acquisition. Have you ever thought about selling? That's how I'd introduce myself. The questions I want to ask: revenue, profit, asking price. At a minimum, these are the minimum things that you want to ask from a seller: revenue, profit, asking price. Right? Because if you don't know the revenue and profit, you don't know how to base the purchase price. All right. One question I get a lot: how do I convince someone to sell their business to me? You don't convince people to sell their business, right? To my point about, why would someone accept a vendor financing deal? It doesn't matter. And you're not here to convince people. You're trying to find a what? Motivated seller. So, a motivated seller is going to give you the 3 years financial statements, corresponding tax returns, and a revenue breakdown of their company. Revenue breakdown of these financial years. Right, and this is what you ask. These are the three sets of items that you ask from a seller when you're looking to make an offer. So before you make an offer, you want to get these items at a minimum. Now, presenting the deal. Everyone got this, by the way? 3 years financials, corresponding tax returns, revenue breakdown. Presenting the deal. What is the most powerful negotiation tactic in the world? I have alluded to this several times in my other material, and that is to walk away. This is the hardest thing for a lot of my clients and students to do. Walk away from the deal. The reason why you're so attached to a deal is because you don't have enough deals on the table, right? I don't care if I lose my deals. I've made a post about this before. I lost a $3 million deal. It was a great deal, $3 million deal. I was super excited for it and I lost it, right? But I don't care. Well, I did care, but I don't care because I had a dozen other deals on the table that I was ready to pursue, right? And you can only walk away comfortably from a deal when you do enough deals. So when it comes to finding deals, you have to find enough deals. You have to do the numbers. And I've already shown you the lead scraping thing before, right? Scrape as many deals as you can and get as many deals on the table as possible. So when you're talking to a seller and they're saying, "Oh, I want this and this. Oh, I don't want to sell for that price," but you're not convincing them of anything. You want to find someone who wants to get out of the business. And don't be afraid to walk away. Now, so I hope you get the picture of how to source deals. So I've shown you how to source deals, right? And now I've shown you how to pitch and present yourself, right? Sourcing deals using the free tools that you have available, using the bloody internet for what it should be used for. Pitching and presenting, right? How to position yourself using a team, using credibility, using other people's reputations, and then how to present yourself, how to position yourself as an individual, right? Communicating clearly, wearing a professional attire, right? This is 80% of the work. Now I'm going to show you how to structure deals. And it is so simple, you're probably going to shoot me. You're probably going to want to feel like you want to shoot me. I'm going to show you three deal structures. I'm going to show you three deal structures that I myself or guys in my network have personally used to close deals. So the first thing I call the vanilla pop. The reason why I call it the vanilla pop is the most easiest stock standard deal that you can do with vendor financing. And I've even gone to the liberty to appease to you mathematicians, to you accountants who like formulas. I've used my big brain and conjured a formula for you. So EBITDA divided by 1.5 times time. Let me explain this. EBITDA, do you guys know what EBITDA is? Earnings before interest, tax, depreciation, amortization, right? So basically net profit before tax and interest and all that shit. Net profit divided by 1.5. Why 1.5? Does anyone know why 1.5? Because 1.5 is the minimum DSCR, debt service coverage ratio. So let's say you have $1 million net profit. You divide that by 1.5. What do you get? You get about $666,000, right? That's how much you can afford to pay in debt service. That's what is meant by debt service coverage ratio. And then multiply that by time. What I mean by time in years. Time in years. So let's say in this example, $1 million, you can start working this out on your calculator, on your notes. $1 million divided by 1.5 times 5. What do you get? That's your purchase price. And this is how you would present it to the seller. You say, hey, I will pay you whatever that purchase price was. So if you guys, I don't have a calculator in front of me. If you guys can do that, 666,000 times 5, what do you get? You say, hey, seller, I'm going to pay you this much over 5 years. And I'm going to pay you 666K per year. And divide that by 12, you get per month, right? So this is called the vanilla pop because it's so easy, it's so stock standard. All it is a purchase price deferred over time. The vanilla pop. This is the easiest way to do it. Do a vendor financing deal. And this is actually how I did my first deal, my first no money down deal to launch my company. This was the Vanilla Pop. This one is a bit of an interesting one. You might be like, what the fuck? It's called the pension plan. The pension plan. 99 years or until death times EBITDA slash divided by 1.5. So this was devised by my friend Elliot. Just in this screenshot, if you can see it. 100% seller finance, 99-year term pension plan. So $350,000 a year in payments, in debt payments until the owner's death, and 1% equity in our overhead company. So the company did 1.5 million in revenue and 500K in profit, in EBITDA, net profit. So 350K is 1 point is $500,000 divided by 1.5, you should get 350K, I believe. If my rough maths is not mistaking me. Right, so and he's just rinsed and repeated that with all of his deals. As you can see at this bottom, offered almost 40 of these so far. All of these are signed in the last week. Nothing else signed yet. More soon though. So he had out of 40, out of 40 offers that he made, three of them got signed. All right, so this is what I mean about volume. Volume, finding enough deals, and presenting properly, right? Presenting properly so people actually take you seriously. Because when you look at this deal, like you're just like, what do you mean 99 years or until death? Like that's kind of ridiculous, right? But you just shoot your shot. You shoot your shot. So this is called the pension plan. This one is probably the one that I've been coming to really love. It's called the Hallelujah. I call it the Hallelujah. Here's where you value a business at 3 to 5 times EBITDA. So whatever the EBITDA is, and then you multiply it by 3 to 5, whatever range you want to do. And then you do interest only payments for 3 to 10 years. So up to you. So again, this is the reason why I put ranges is so you can structure it to whatever fits the business, whatever fits your industry, whatever fits the market rates, right? So again, vendor finance deals are typically above market rate, right? So if people are usually paying 3 times, maybe you'll offer this guy 4 times and interest only. Once you get that final number, you pay interest only for a certain amount of time. Usually, I would say 3 to 10 years is a good time frame. My friend Cam did 10 years, does 10 years for a lot of his deals, and then balloon payments. So you can either fit balloon payments throughout the interest only periods or at the end. Does that make sense, right? So you have a purchase price, you pay interest only on that price. So let's say, you know, the standard rates out there are 8%. You might offer like, hey, I'll pay you 9% interest on this price. Right? So you're paying interest only, and then balloon payments are lump sum payments that you can afford to pay the seller or at certain intervals. Right? So you can either do it all at the end, which is what my friend Cam did. All right, so he did a deal where I'll show you later, where he paid the balloon at the end. So as you can see, so these are only three deal structures so far. Only three. And there are hundreds of ways you can structure a no money down vendor finance deal. Right, there's so you can get so flexible and creative with it. These are only three, and you could probably only use these three to start closing deals. And you probably figure things out for yourself. The most important thing I want you guys to understand is free cash flow must cover debt service. Free cash flow divided by debt service is your DSCR. That's how you calculate DSCR. Right? So this applies more to bank lending, right? You're gonna have to get really good at this formula, presenting this when you're getting money from the banks, but this is something for your reference. 1.5 plus, this is the minimum floor that you want. Right, minimum. You don't want to go lower than that because chances are you're going to fuck up the business and you're not going to have enough cash to operate the business, and you're going to have to declare bankruptcy. Which is why I also say build a team. If you don't know what you're doing, get people who do. And also why I say find a business that's doing $1 million or more in revenue, right? And has a workforce of at least four or more people. But otherwise, when it comes to the numbers side of things, 1.5 plus for a deal structure, for a DSCR. Okay. We just went through, literally just went through. How simple was that, guys? How simple was it to understand this process? How to buy companies using 100% vendor finance in 90 days or less? I've given you the first principle, volume. Find enough deals, and I've shown you how to find the deals. Two, positioning. How do you present properly, right? Building a team, right? Saying the right things, wearing the right attire, and then pitch. What's in it for me? I've alluded to this earlier on in my slide. Like, why would people accept a vendor finance deal? I've given you the serious reasons why, right? People are going to get more cash. People are going to get, it might be more tax friendly. Rather than getting a lump sum payment, they're getting payment over time and a fast closing. Rather than waiting on the banks to give me money, we can just close this deal now, right? With them. What's in it for me? This is Cam, BDC. And as I said, I'll tell you what that stands for. BDC stands for Big Dick Cameron. The reason why I call him Big Dick Cameron is because he closed two deals in 23 bloody days. Who do you know that has closed two deals in 23 days? No one. This is my guy. My guy, 100%, and both deals were done 100% vendor finance. He wouldn't have been able to do this with bank financing. So if you're in the States, if you're trying to do SBA financing, you're never going to close the deal in 23 days. But you can with vendor finance. Now, his deals, he did interest only for 10 years and then balloon payments at year 3 and year 10. Right? So quite literally what I showed you with the hallelujah, right? Interest only payments for 10 years to the seller, monthly payments, and then a balloon payment. What does a balloon payment mean? Um, I will have to find out for you in a minute, but it was a portion of the price, right? It was a portion of the price of what he could afford, whether it was saving up money in the business or getting a loan from the bank to fund that balloon. But by year 10, he paid out the rest of the money. So you can see this little screenshot here, I just closed two deals. The combined stats, 508K EBITDA or 508K profit, $1.75 million purchase price, and a 550K overfinance. What this overfinance means is he got $500,000 from the banks in a working capital loan after he closed these deals. So as he closed these deals on a vendor finance, no money down, he at the same time he was talking to the banks and said, "Hey, I want $500,000 as a working capital loan for these businesses." Right, so he was able to acquire two assets, no money down, and get $500,000 from the banks that he could spend on whatever the fuck he wants. So this is the power of vendor financing. Here's my first deal. This is the seller of my first clinic. His name's David. I went through four failed deals, right? So I spent a lot of time working on these deals, and the reason why I say you have to build up your deal pipeline, right? I went through four failed deals. I went through 1,000 cold calls, up to 1,000 cold calls to sellers, to this was a combination of sellers, bankers, people, right? 1,000 cold calls, and I ended up closing this guy. 100% vendor finance, 7 years, 4% interest, monthly principal and interest. So this was my my vanilla pop model, where it was just a purchase price, here's an interest, and here's the time frame that I want to pay you over. And that was my first deal. Now I'm going to show you a little bit of a case study. You know, this is my client, my most recent client, Jai Kingston. You can go find him and stalk him on LinkedIn if you want. But he launched his company, King Vets. King Vet, he's in Australia like me. So he's focused on the vet the veterinary industry, right? Buying up vet clinics, consolidating them, and in 5, 10 years' time, he's going to exit for hundreds of millions of dollars. Jai Kingston, founder of King Vets. So he launched with no knowledge of the industry or any experience in finance, right? He had no idea what he was doing. He comes from an analytical, overthinking IT background. But when he started working with me, he just learned to shut the fuck up and just take action, right? Most people who get into this are just like, oh, but this doesn't make sense. Like, why would this person do this? Why would this happen? Why this number doesn't make sense? It doesn't matter. Just focus on the next steps in front of you and just keep walking and figure it out as you go. He ended up building his board of directors in 30 days. Right now, he's got over 12 deals currently active, right? And he just recently held his first board meeting, which I was in attendance. He did very well to approve and review the deals that he's working on. And now he's initiating the close of his first deal. Ever since we started working, his communication, leadership, and social skills have elevated through the fucking roof, right? So he is right, IT background, analytical, overthinking background, right? And now he's in the world of deal making. He's a different person now. And all of this was done in 3 months. So to my point about taking action and being not being afraid to face your insecurities and you're willing to change, right? The only way you're going to get this done, the only way for you to execute the model that I've just showed you is if you take action. So all of this was done in 3 months, and the reason why, so before I get into the reason why, if you do want to work with me, one-on-one tailored advisory starts from 18K. You can DM me on Instagram or Telegram, whatever you use. You can just DM me. My handles are there. Official Josh Lee on Instagram, the Josh Lee on Telegram. If you want one-on-one tailored advisory, doesn't matter where you are in the world, I'll be able to work with you. And I've got people probably where you are who can meet with you and help you and coach you, and you'll get access to my private community as well. But the reason why Jai was successful is something I want to talk about, passive versus active risk, right? This is a quote from Brendan Burchard or Burchard. He's a high performance coach. He says, I coach 4 billionaires. Their number one trait is assertiveness. They assert themselves into situations because they believe they'll figure it out. Right? So this is a concept of deciding at 60% and then figuring it out as you go, because there is never a perfect moment. When I started my journey, right, I quit my job and I became unemployed to pursue this thing. I had no savings. I didn't have any idea as to how I was going to make money, how I was going to stay alive, how I was going to feed myself, right? I just said, I kind of know what I'm doing. I'm just going to do it. I quit my job and I went into this balls deep, balls to the wall, pedal to the metal, and just did it. Right? And this is what why most people will never succeed as entrepreneurs is because you can't decide at 60%. Right? This is the reason why I mentioned the analytical IT background is most engineers, accountants, lawyers, you need to understand 100% before you take action. But the greatest entrepreneurs, the most wealthiest people in this world, all decide at 60%. You just got to know enough to move forward, right? There's never going to be enough money to save. There's never going to be a perfect time. You just need to move forward. I've already given you the 60% that you need to know to move forward. Right, let's go back to this pop quiz. Bit of fun now. So I've just rambled for the last, I don't know, close to 2 hours. I've spat out a lot of bullshit. Well, not bullshit, but I call everything bullshit. I'll spat out a lot of shit. You guys have hopefully been taking a lot of notes. I've given you all the answers to these questions throughout the presentation. Now, I want you guys to start telling me in the chat. Answer to question one. What is the minimum DSCR I recommend? Juanita, come on. 1.5, 1.5, exactly. Easy. Now, Next question. How much money do you need to buy a company? We should all know this. Zero, zero, zero. Yes, yes, yes. Thank you very much. Glad you're paying attention. Now, what's the best way to find deals? I like that, Namir. Off market, scraper tools. Exactly. Go off market. Avoid the brokers, right? Find deals yourself. Put in the elbow grease, like quite literally, the elbow grease of picking up the phone. And I know nowadays you can you've got the AirPods and you've got all the, it's so easy. It's so easy. I don't know why people don't do it. Anyway, question four. What's the best deal negotiation tactic? Best deal negotiation tactic. Walking away, yes. With him, that is not what I was alluding to, but with him is something that I was harping on about. But no, the best deal negotiation tactic, right? So that's presentation. What you guys are talking about is presentation. How do you actually present a deal? It's you present what's in it for me. But when you're negotiating, when you're negotiating a deal, when people are trying to play ball, right? When people are trying to argue, hey, I think you should no, I want money up front. I want this in the deal. What's the best thing you can do is walk away. Walk away. Just don't be afraid of that because I already showed you there are thousands, if not tens of thousands, hundreds of thousands of businesses across every single industry that you can approach to buy. Right? If a hundred, my friend Jason actually, the one in radiology, he he is infamous for half the market not wanting to talk to him. Right? Half the market didn't want to talk to him because of how much of an asshole he was, but he still had half the market who was willing to do business with him. Right? So it doesn't matter. It doesn't matter if half the market doesn't want to talk to you because you still got the other half. So this is what I mean about walking away. Don't be afraid to walk away. He still made $200 million, even though half the market hated him, right? Now, I think the question that I didn't talk too much on about, but I did mention, what are the three sets of items you should get before making an offer? Namir, shut up. You're giving away all the answers. What are the three sets of items you should get before making an offer? So yes, 3 years financial statements, 3 years tax returns, so corresponding tax returns, right? So if someone's willing to give you their tax returns, it means they're willing to divulge their business and say, "Hey, yep, look, curtains unveiled. I wanna, I wanna, I wanna sell my business." They're motivated to sell, right? And then you want to see the revenue breakdown. The reason why you want to see the revenue breakdown, let's say in particular, the in the healthcare industry, the clinical healthcare industry, I want to see how involved the owner is in that business, right? Because let's say I'm buying a clinic and there's five practitioners. One of those practitioners is the owner. I want to see if the owner is earning, how much of the revenue is the owner earning? And that's also going to dictate a term in the deal. And one thing I didn't cover off in this presentation is one thing to consider is if the owner is involved in the business, you want to keep them in the business. Yeah. So you want to tie them to the business depending on how involved they are. So it could be 6 months all the way through to 5 years. Right. I've got two guys in Canada, two brothers, the Mateo brothers, French-speaking Canadians. They bought a trucking company and they kept the guy on for 5 years. Okay. Seems like you guys have learnt a lot. I hope you guys have learnt a lot, and I hope you guys have been taking lots of notes. You've been able to answer these five questions, so you must have learnt a lot. Now, as I promised, I am going to make a special offer to you guys. Um, I've already mentioned this already, the Owners Academy. This is my private community, right? So everything that you guys learned today, this is only the tip of the iceberg. I've spent an hour and a half talking about vendor financing, but the Owners Academy goes into detail as to the whole process, right? So the whole process that I'm alluding to is this, And even this is only a snapshot of the acquisition process. So if you missed your chance to take a picture of this, you can take a picture of this now. I'll move out of the way if you want. Make sure you're following this process when you're buying companies. And I couldn't even fit it all into the slide, but I break it down even further. Every step here has nuanced steps to take, right? And I coach you through the Owners Academy through every single step of the process, right? So if you liked what you saw today and how simple I broke it down, I do that for every aspect of the business. Now, these are just some examples of the guys in the group. So recently, one of my boys, Ray, he visited the Rolls-Royce dealership. You know, getting comfortable in the Rolls-Royce, sitting there. You can see the stars in the ceiling. But look, I'm here to help my guys, basically 24/7. Anytime there's a question, anytime there's a problem, no matter what stage of the process you're at, you can always come to the group, right? You can always come to the Owners Academy and pose the question. So here we're talking about some board, like how to build your team, like what questions to ask. Um, Here we've got one of the members who actually had a call with another member, and they just shared their notes to everyone, right? So I think this is probably the most valuable thing. It's not even the course itself, right? Like I give you a full course, but I don't even think it's the course that it's the knowledge that people need. Because the process is very simple. To buy a company is very simple. I've already shown you the elements of a deal is only like four parts, right? But the reason why people don't succeed with this is because they don't stick with this shit long enough. They don't know, they can't stay focused. They don't have the accountability of a group, of a team, of someone like me who's going to kick them up the ass on a weekly basis, right? So I tell my guys all the time, like if you have problems, you reach out to me and I'm going to help you as soon as possible. And I usually reply in within 24, 48 hours. So this is everything you get in the Owners Academy, by the way, step-by-step course, in-depth material. It's structured learning. You get a like-minded community. As I said, these are guys all around the world. And here are the two most important things, in my opinion, accountability and live coaching, right? To make the process work for you, sorry, to work the process you as a person to do the work, I think it's accountability. If you're just sitting there by yourself and you walk away from this presentation today and you don't do anything, that's on you, right? Or if you do something, maybe 2 weeks down the track, you're going to forget about it. That's what typically happens with every fucking seminar or webinar. You know, people chase courses, people chase these events because they feel like they're productive. I hope you've been taking notes for one, but you've taken all these notes, you're feeling productive, but then in 2 weeks' time, are you actually going to do anything about it? So the Owners Academy is here to help keep you accountable to your goals, right? And there's live coaching. So I do a lot of these live sessions on a regular basis, and as I've alluded to as well, you can reach out to me anytime. As an Owners Academy member, you have direct access to me. Right, so today you guys have access to me because you've signed up, you've showed up, you're investing time into this, you're giving me your attention, which I thank you for. So you get access to my wisdom and my knowledge. And I'm going to go into Q&A later. So if you have any questions and you want to go into a little bit more detail on certain aspects, we're gonna go into that. Um, but look, I'm here to help my guys, right? And that's I think the last 2 points are the most important. So today, if you do want to pick it up, you can scan this QR code. It'll take you straight to the Academy page where you can kind of see some reviews. You can see what we're all about. And today it's only 1888. So we've recently just increased the price to join to 2500 live only just on this session. You're going to get it for 1888. Only through this link though. So only through this link, and you know what? I'm gonna grab the link for you guys in the chat as well. If you guys want to hop into this, fastest way to your next closed deal with people who are actually doing it. I know some of you guys might be familiar with people like Cody Sanchez, Ben Kelly, fucking Aaron Sansoni, Roland Frazier. I've got guys in my network right now who've paid for their stuff, who say your stuff is 10 times more practical and I actually get access to you. to me, Josh Lee, right? If you buy Cody Sanchez's stuff, it's hard to get in touch with her. If you buy Roland Frazier's stuff, it's hard to get in touch with him. It's hard to get in touch with the actual coach who's supposed to be coaching you. But that's the reason why I've set up the Owners Academy. Once you join, I will actually personally, me myself, on my phone, I will reach out to you and say and ask you questions about your situation so I can give you a tailored plan. I don't think anyone else is going to do that for you in the acquisition space because for some reason, everyone in the acquisition space is so high and mighty, Mr. Finance, Mrs. Finance. I don't have time for you students, for you peasants, right? But look, I started this when I was unemployed, and this is something I started because I wish I had when I started, right? I had to learn all this stuff by myself, right? I had to go through a really rough grind to get to where I am today. And this is why I'm distilling my wisdom to you guys because all of the stuff that I teach is practical, all through personal experience. So you can scan the QR code or hit the link in the chat if you want to join the Owners Academy. And once you do join, you'll get access to the private Telegram, the private group where you can talk to all the guys in the Owners Academy, and I will reach out to you personally and we can work out a private plan, right? So this is not only community, but it's coaching. Like I will coach you on a day-to-day basis. However you need, you can get results like my other guys I've just showed you before. You know, Big Dick Cam, Elliot with the 99 pension plan, Jai Kingston's one of my success stories right now. He as I said, the reason why he was able to work is because he paid me the money, he took it seriously, and he took action. That's the most important thing. I think if you were to walk away from this and you treat this as a free webinar, I've got all my notes, and you're just it's there's no investment. You're not emotionally invested. But if you put some money down, right, you put some value to it. So I've got people that are paying me $10,000, $20,000, and they haven't done nothing because they don't care, right? They're making 30, 50K a month. They're comfortable. And they've given me, yeah, Josh, here's 10, 20K, and they're doing nothing, right? So I could have priced this a lot differently, but I think the audience out there who wants to get into this is a very accessible price for most people. It's up to you to take action at the end of the day. And this is a lifetime membership, by the way. So yeah, multiply this or divide this by however long you think you're gonna live. That's that's your vendor finance, vendor financing value. This is a USD price, USD price. But it is lifetime membership. The reason why I'm not putting a 12-month access to it is, or limited access to it, is because the whole point of the Owners Academy is for you to do deals, for you to do deals and elevate into a higher position, right? So you're no longer an employee, a student, unemployed. You've actually got a business or businesses that are paying you and you've got some wealth to your name and now you can start doing bigger things. And I've got another network that is not paid. It's just a network of us guys and gals who have deals and we're just business owners and we shoot the shit. We talk to each other. We tell each other, developments in our industries, in our countries. So the whole point of the Owners Academy is an academy, right? You're here to learn, you're here to execute, and how you graduate from the academy is to do a deal. That's the incentive for me. I don't care about the money here that you pay me. This is more for you. This is an investment for you. And the goal is for you to actually graduate to do a deal. The link is there in the chat, so you guys can access that whenever. If you've got the code, scan the code. But let's get into some Q&A. So if you're not shy, please hop on the mic. I don't mind. But if you are shy, then go for it on the chat. I'm happy to answer questions, whatever questions you might have about this topic in particular. And yes, there are such things as stupid questions. Irrelevant questions will also not be answered. Okay, does it make sense to hire an SDR to do initial outreach after building lists? What's an SDR? Sales development. No, do them yourself. Don't hire people to build lists. I've tried that. I've tried Fiverr and those things to build lists. They give me shit. And there's a lot of people who will give you AI lists, and these AI lists, half the businesses are fake, right? So do them yourself. Do the thing that I showed you. The go on Google, go on Google, do the Pokeball instant data scraper thing, and call them yourself. Go through Apollo, find the contact details yourself, and call them yourself. Because going back to my point about the professionalism, right? You want to establish the relationship. You want the seller to know you. So rather than talking to a minion, like some dude you hire, right? They're actually talking to the founder, like, oh shit, the CEO just called me, right? That's the impression you want to make. Like, oh, the CEO just called me. Connected to the look like a real private equity firm approach. Um, you don't want to look. That's an interesting point. You don't want to look like a private equity firm. The reason why these sellers will actually go to you, use your personality as an advantage, right? Private equity will offer you the money, but they won't offer you the brand and the personality. Like, I wish I could have got Jai here today, but Jai's in the vet industry that's heavily dominated by private equity, and a lot of the owners say to Jai, like, "Hey, I really appreciate the fact that I'm talking to you, the founder, and not some private equity mob." Right? So it's a lot of sellers, especially these traditional businesses, they value legacy. They value someone who's going to take look after their business, not just someone who's going to cut cost, fire people, and just change the business, right? Like these people who have grown their business over 10, 20, 30 years, they value legacy. So yes, do the outreach yourself because that's really important. You actually, what's it called? Developing the relationship yourself. Data Axle, I think I've heard of that, but whatever you can use, whatever data platforms you can use to get a company name, the owner's name, their email, and their address, use them. And LinkedIn is such a good tool. LinkedIn is my like is LinkedIn was built for this. You can build your team with it, you can hire people with it, and you can also find company owners with it, right? So LinkedIn's easy and it's free. How would you recommend building a board, hunting money, hunting deals while still working on a regular job? I would do it in my lunch break, and I would do it after work. It's very achievable, right? So if you did the thing that I did, quit my job to go do this full time, then you have obviously a lot more time and effort that you can put into the process. But if you're still working a job right now, a 9 to 5, you got to pay the bills, you got to put money on the table, you got to put food on the table, you got to pay the mortgage, the rent. That's completely fine. You can still do this. Like if you spend half an hour during your lunch break, building up a list, right? Going on to Google, doing the thing, finding contact details, putting them on a sheet, and then after work, after 5 o'clock, maybe you stay behind at the office and you're just making calls. You make calls for an hour or two. Stay behind at the office, or you just go home. Make dinner and call people at 7 p.m. Call people at 7 p.m., 8 p.m. Because most business owners, you'd be surprised at the hours that the business owners work, right? Like even myself, I started this at 7:30 a.m. It's 9:23 a.m. for me now. Right? So I started early morning before business hours, right? So just pick up the phone and call. And one thing I like to do is harass. I harass every lead that I have. I will call them like 5 times a day. So your time's going to be limited. Just to answer your question, your time's going to be limited, but it's very possible, very doable. Is building a board needed to get a deal with seller financing, or can I build a mini board? With what I showed today in particular, it's very possible without a board. So you can just build a mini board like Christian, right? Christian, that's why I showed Christian. He was my example. Um, he he got two guys, a CEO and a CFO. He got two guys, world-class people to join his company, and he used that as his like credibility, right? But I would always recommend building a board because it's the subconscious perception. So when you're the whole thing about the suit, right? You know, casual clothes versus suit. And if I was to present to you, hey, I've got a board of directors. As a small business owner who doesn't have a board of directors, they're like, oh, okay, this guy's like someone or something. I'm curious. So it's up to you. But I do recommend building a team at the very minimum of 2 or 3 people. Like a mini board is fine. How do you balance the don't look like PE with the board, your company name, etc.? Like when you introduce yourself as a founder, doesn't that smell like PE to folks? Uh, Energy, man. Energy. When I talk to people on the phone, well, I talk to people on the phone, I send them my summary, and oftentimes I push for a meeting. I push for a meeting either through video or in person, right? So over the video, they're gonna see me, and I'm gonna make it. I just don't sound and smell like PE. Like when you, I don't know, if you've ever dealt with private equity, there's a certain smell to private equity. But like the fact that you've never been in business before, you don't have the industry experience, and preferably that you don't have the business experience, people can tell, right? People can tell. And I explicitly say it to people who are skeptical. I say, hey, I'm not a large corporation or a private equity backed or venture capital backed company. Like this is me. This is my ambition, my dream. I built this with my own 2 hands. I say that. I say that to people. And I say, hey, these people on my board, I recruited them myself. These are people that I reached out to, I hand selected myself. In some industries, it actually doesn't matter too much. Like a lot of times in construction, in like the blue collar industries, they don't really care. But in healthcare, they care a lot. Like I get a lot of these like doctors and medical practitioners who are like, "Oh, so t tell me about your team. How did you find your team? Why did you build your company? Like, who's funding you?" Like, right, they ask all the questions, and it's beneficial to me because then I don't have to bring it up myself, right? I don't have to sell myself. They're already asking me proactively. And it's just in your relationship. It's in your relationship and your energy. Like you hear me talking to you now. Like, do I sound like a stiff? Do I sound like, I'm private equity? Like, I'm just a guy. I'm just a regular fucking guy. So is it important for your board of directors to be in close proximity to you, or they can live across the US? In the USA, you have a lot more flexibility. Same with the EU. It's fine if your guys are a little bit more spread out, because you guys have airports and train stations and all these transport where people can travel very easily. In also in this day and age of video, right? Zoom, like what we're on right now, video calls. It's very easy to get in touch with people and keep people in the loop. In the most recent board meeting with Jai Kingston, when we did our board meeting, 2 of our directors were interstate and they dialed in video. So we were in our accountant's office and they had, the nice fancy setup and with the tracking camera and everything. So yeah, it's fine. It's fine if people are interstate. But I do personally. So my board, I built. They were all in my state, all within my city. So I actually met them. I saw them eyeball to eyeball. I shook their hands. I personally like to do business that way. I'm a little bit old school like that, but it's not mandatory for every director to be in person because you might find someone really good who's outside. Best industries to acquire businesses, in your opinion? Healthcare is the best because healthcare has so many verticals, and healthcare typically has good margins. So I'm clinical healthcare, right? So you could look at hospitals, you could look at private hospitals, short stay hospitals. You could look at the lower end, which is home healthcare, assisted living, that kind of stuff. Other industries that I like as well is logistics. So waste management and transport. So I've got guys in Canada that are in trucking. Christian that I showed before, he's in waste management. So that's all logistics, like moving things. Another one would be home services, home and commercial services. So cleaning and landscaping, those are actually really good businesses to be in because it's very easy to hire people because there's no like in clinical healthcare, the doctors I need to hire need qualifications, right? It takes 10 years to be a fucking doctor, right? So it's not like I can just hire some random people. But in landscaping, in cleaning, you can just hire like an immigrant. Like you can hire some like African or Indian, right? I'm not being racist there, by the way. I'm just speaking facts. So th those are some industries that are really good to go in. Healthcare, logistics, what was it service like not professional services like home commercial services, cleaning, landscaping, things like that. One roll-up model I read about today, they got to 1 billion rev, they kept owners on and gave them large equity in the parent co. Do you recommend this? Yes. Yes, I do. Keeping owners on and giving them equity in the parent company. One thing I didn't share in this was when you're issuing equity in the parent company as a sales tool, you can say to the seller, "Hey, I'm building a large corporation. You can ride on the growth of us. Like I can give you some equity in our company so you can ride on the growth." You want to, I'd say be careful with these people as well, especially when you're dealing with smaller businesses. Say in this example, when it's $1 billion company and they kept the owners on, it's because they know what they're doing, right? The owners know what they're doing, and the people who bought them are like, well, if we lose the owners, we're probably going to lose a lot of value in what we just paid for. So yes, I do that. That's a really good way to buy companies. Actually, keeping the owners on. As I've already mentioned this, right? It could be 6 months, 12 months, 3 years, and then issuing equity in the parent company. It's a really good model. Can you talk a bit about getting accountants, lawyers to work on deferred fees? You're only going to get accountants and lawyers to work on deferred fees if you have the right positioning. So one way to do that is building the board and the team, right? But even even without the positioning, let's say you do this yourself. Let's say you don't listen to what I say and you just go out there by yourself. Okay, you're going to wear a suit at least. You're going to present well. Um, when you're signing the contract, when you're preparing the contract, you're going to need to get lawyers to do the work, right? The lawyers don't really need money up front. Usually when they issue an invoice, it's 14, 30, 60 days to pay, right? So when you close the business, you can actually, in parallel, talk to the banks. You can talk to a bank and say, hey, I'm buying this company. I need $50,000 as a working capital loan when we settle. And that's what, Big Dick Cam did. He got $500,000. That's what I did with my deal. I got a little loan from the bank, $30,000 to cover legal fees. Right, so using bank financing to cover these fees. And if you do it right, if you talk to banks while you're buying the business, while you're going through due diligence, while you're setting up the contract, you should be able to set it up on day one. You can get that loan sent, like that money sent into your account in under your name. And then you can use that money to pay the lawyers. And yes, warm up the money. So yeah, that hope that answers your question. Healthcare is definitely good to scale up to get gov contracts and so on. Yes. So again, healthcare is such a big industry. There's so many different verticals. There's so many different initiatives at the federal and the state level, or the federal and state level. There's so many grants and contracts that the government can do. Which is actually probably a lot more prominent in logistics. So waste management, for example, waste management is really good for government contracts, especially if the government is building a lot. Have you explored using private capital providence to get the cash for funding? I have. I so private lenders, as I said, are more expensive and have more stricter terms. So they're a good option if you can't get it from the banks. But again, with this model, we're doing vendor financing, right? So we don't need the private capital or private investors. But if you are using them, just keep in mind that it's going to be a little bit more expensive. So the interest rate's going to be higher. Your debt service coverage ratio, remember that, free cash flow over debt service. You're going to need to be a little bit more careful there. And the private investors, A lot of investors, a lot of investors, real investors want to invest in tech and like those industries. There are very few people who want to get into traditional businesses, and if they do, they want to do it themselves. Uh, there aren't a lot of people who are in this like, six-figure space, six-figure lending space that will give you money to invest in your company, because they'd rather just invest into stocks and property. It's a lot more stable. Right. Again, it's a numbers game. And in my model, you don't need private investors or private capital. But if you are going to use them, it's a numbers game. Use LinkedIn, use whatever, and just start. You just got to pitch and present. Yeah, pitch and present, and warm up the money. So a big part of if you're familiar with a lot of my material, two concepts that I harp on about is get the fucking money and get the fucking deals. That should be your main job. So on a daily basis, you should be finding where's the money? Where can I get the money? Where can I get the deals? Uh, that concludes the 2 hours. We've gone a little bit over. We've got one more question to the point about property stocks. Why are more folks doing this type of thing? It seems like a chance for way outsized returns on time, money. It's because it takes work, man. So this is my last question. It takes work, right? Property is so streamlined and standardized. It's so easy to get into if you have money. If you have $250,000 to put down for a deposit, a bank is going to give you the money every single day of the week. And it's so easy to find a property to buy. It's quite easy to find tenants. It's quite easy to manage, right? Like you don't even need to do anything like that. You don't need to do that much. But it's the returns, yes, the returns are way more in business because in rental property, you're relying on the market. You're relying on the market to grow, right? You're relying on $1 million property to become a $3 million property in 10, 20 years time. And that's 10, 20 years for a $1, $2 million return. Whereas this, with businesses, you could buy a business and double it almost overnight, which is what I did with my first company. Like we bought it and we doubled it in 6 months. Exactly. Most people don't have that kind of discipline and time to be accountable, right? Accountable to their actions and consistently doing this. Consistently doing this, warming up the money, talking to people on a daily basis, right? So after this, I'm going to head over to one of my clinics. I'm going to be following up with all my deals. I'm going to be following up with the money. I'm going to be checking in on some of my bankers. I'm going to say, hey, how you going? Christmas time, you're going to be going away. You're going to be ready for me to do some deals. You're going to be ready for me to give me some money. Right? I'm going to be talking to a lot of people every single day. Okay. This is a good question from Rebecca, and I will answer it, but no more. No more fucking questions. What happens when deals die and the team, accountants, lawyers have put in work? Here's where we do delayed fees. But also, this is why we only engage the professionals when we know we're going to do a deal. When we know we're going to close the deal, that's when we go to the accountants and the lawyers. And how do you know that you're going to close the deal? Okay, if you don't know business, that's why you have a team, right? That's why you build the team around you, so you can say, guys, are we doing this or not? Um, and also in my proper, if you do it the proper way, the full model, it is getting them on a delayed, rolled, or deferred basis. Right? So write that down: delayed, rolled, or deferred basis. That's how you want them to work when you're doing this properly. But if you're gonna go through with this, what I just showed today, vendor financing, right? Vendor financing, you've gone through due diligence yourself. Remember what I said, quality of earnings. That's the most important thing. Quality of earnings. Once you find the quality of earnings, you're pretty damn sure that the money's there, the money's gonna be there. You want to close the deal. So you incorporate, you set up the accounts, you make sure the terms, you make sure the seller. That's why the relationship with the seller is so super important. So they're not gonna just walk away, right? So you engage the professionals when you know you're gonna close the deal. That's typically my rule of thumb. And yeah, look, everything's a risk, right? There's always a risk if you cross the street today, you're gonna get hit by a car. Yeah, so that's always a risk. I'm in Australia. DM me on Instagram. If you got more questions, DM me on Instagram or Telegram. I've given you my handles. I'm gonna give you my handles here. Official Josh Lee. That's Instagram and on tel. What the fuck? Josh Lee on Telegram. Guys, thank you for your time and energy and watching. I hope you guys learned a lot from this. Hope it was entertaining. Hope it wasn't boring. Hope you guys learned a lot. Hope you actually take action with this. So, guys, feel free to reach out to me on Instagram or Telegram if you have any more questions. If you want to join the Owners Academy, or if you just want to share your situation, you want to get my insight on it. Feel free. I'm all ears, and I'm more than happy to distill my wisdom over to you because I wish I had people who would do that for me when I started. So, guys, have a blessed day, have a blessed night, have a good sleep wherever you are in the world. Thank you so much. I look forward to seeing you again, perhaps on another live session or maybe in the Owners Academy. So, take care, guys. It was a pleasure. Now, the question is, how do I stop this?